Welcome everybody back to Ethereum Millionaire, and we have an emergency update, emergency broadcast. Get everybody you know, get everybody around your laptop. This is a must watch video, and it's going to be the best video you see on crypto. This is an emergency alert, breaking news Ethereum chart. If you look down where this move started at $88, $90 roughly, somewhere around there, we had a parabolic move all the way up past our first long-term resistance, second long-term multi-year resistance, and then we just catapulted up, and our parabolic run to me ended at $12.89. And you say, well, what do you mean? We're all the way sitting up here at $2,773.81 currently. That is true. But if you look down here, the volume peaked at the top of this parabolic run from $88 to just under $1,300. Since then, you've had steadily decreasing volume. If you look at our volume down here, right? And we've entered now into a pattern which is called a rising wedge. When you have falling volume, a rising wedge off parabolic move, usually anytime you have rising price and falling volume, that's an exhausting ending of a pattern. That's the pattern exhausting itself. The buyers are running out. You can see the flash crash here that we're not going to pay attention to, because the whole crypto market 2 weeks ago had a flash 25% crash, which is normal for the crypto world. If you've been around for a few years, you've seen it multiple times, but it got quickly bought back up. You've seen right north of our major long-term support box, right? But if you pay attention to the blue dotted line and the blue dotted line, you're going to notice we've had, since we've peaked here, we've had a low, a higher low. Don't count that. That's the major top. That's the major crypto sell-off. Higher low, higher low, higher low, higher low, higher high, higher high, higher high, higher high. So we've hit the upper box 1, 2, 3 times. We've hit the lower box 1, arguably 2, 3, 4 times, 5 times up here. What I think's happening, if we zoom in to the 2-hour time frame just to get it closer, is you see the volume is dead, but the price is inching its way up. I think you're about to see a major selling volume, and you're going to test this lower support of the rising wedge, and I think you're going to fall all the way back down to your support line. When you say, how do you know where your support line is and what's the target move? Well, the target move out of a rising wedge, which we entered right here, the target move would be at the bottom of the wedge, which you can see this line here, the pink line. That's about $1,032. That's your target move. And if you had stop loss limits, I would have them outside of this box by a few percent. So the bottom of the box is, we'll say 2,250 if it's over here, and you could save yourself 50% loss. That's where I think it's going. Now, if we want to go to the bullish news for the crypto world, and very bullish news, is Fed holds interest rates near zero, sees faster growth and higher inflation. Well, if you're in the crypto world, higher inflation is bad for the dollar, as you know. And if it's bad for the dollar and you're a hard-term hodler in the crypto world, or a hardcore crypto guy or gal, higher inflation means a weaker dollar. A weaker dollar would mean currencies, commodities that are hedged against a weaker dollar would go up. So if you're in Bitcoin because you're hedging against a weak dollar, this is great ultimate bullish news for you. As expected, U.S. central banks decide to keep short-term interest rates anchored near zero as it buys at least 120 billion of bonds each month. That's 120 billion each month, not each year, each month, right? That's a lot of money. 120 billion of bonds each month. The latter part of the policy is a two-pronged effect to support an economy that grows strongly to start 2021, right? Jerome Powell, Fed chairman, Powell added, it is still not time to talk about reducing policy accommodations, including asset purchases. Well, when they purchase assets, they inflate the asset price. When they inflate the asset price, they deflate the purchasing power of the dollar. So this is all good for if you're hedging against the US dollar and some of your money in crypto. This is what you want to hear. Same thing if you're in gold. My gold bugs. I'm a gold bug. This is great for gold. It shows gaining 6.5% GDP. March consumer price index rising 2.6% for the fastest year-over-year increase since August 2018. But the consumer price index, they manipulate it to make inflation not seem as high as what it is, so that way they can keep pumping money and liquidity into the markets, keep buying bonds, keep buying treasury treasury notes, etc. But if you look at the used car market, they've skyrocketed 12% week over week. Used car prices are at an all-time high, about $25,000. New car prices are at an all-time high at over I believe it's nearing 50,000. Prices at the grocery store are going up. So they're lying with the consumer price index. It's more than 2.75% year over year. But as they're saying, I digress. Markets are currently pricing in a 5-year inflation rate around 2.5%. The level was less than 0.8 a year ago. It's going to be much, much, much higher than the 2.5%. The Fed is committed to allowing inflation to run hotter than its traditional 2% goal, which, if back 50 years ago or 70 years ago when the Fed was created, the Federal Reserve, its only job was to ensure price stability. Now, 2% a year raise is not price stability. Price stability would mean year over year, decade over decade, there's not much variability in the inflation rate. But now they want 2% inflation. Why do they want 2% inflation? Because if inflation rises, asset prices rises. If asset prices rise, the mounting pressure to meet the debt becomes less of a burden because your stocks are rising. The debt you owned is now becoming less of debt because the asset that you own, the paper value of it is going up higher than the debt that you acquired it at. So it wipes away debt, essentially. If you have a good balance between inflation and economic growth, you can wipe away debt with inflation. And that's what the Federal Reserve is doing, because that's what the federal government needs in order to keep the whole Ponzi scheme going and not let the whole house of cards come crashing down. But we all know this. But this was just a quick video just to show you guys what's going to go on with Ethereum. And we're going to leave you here with this snapshot. Our target price for Ethereum is all the way down here. All the way down here. Right here. This pink line, because we are in a rising wedge with falling volume after a parabolic move up, and this would be a healthy correction down to the bottom part of this wedge where it started. You see, it's an extended wedge. But the volume's decreasing, the wedge is tightening. It's gonna retest the bottom support line, which are these dotted lines, and it's gonna come back down to 1,050 roughly, right around here. So heads up. We'll get back to you with an update here soon.